आसान है और एग्जीक्यूशन बहुत तेजी से होती है। एक आम ट्रेडर के लिए किसी मुश्किल या पेचीदा सॉफ्टवेयर में उलझने के बजाय ऐसे प्लेटफॉर्म्स का चुनाव बेहतर रहता है जो सिंपल हो और जहां ट्रेड्स बगैर किसी लैग या रुकावट के प्लेस हो।
Okay, let's dive right into this explainer with a concept that honestly sounds completely unhinged at first glance. We're talking about applying high stakes Wall Street financial strategy to literal apocalyptic survival. Today, we're analyzing two incredibly different sources that actually share the exact same DNA. On one hand, we've got an intensive financial analysis of how to navigate a brutal bear market using 7 strategic stock picks. And on the other, a gritty, survival focused story about a guy trying to outlive a zombie apocalypse using a totally unique resource system. So, what do a volatile 2023 stock portfolio and a zombie apocalypse safe house actually have in common? I know, it sounds like a crazy question, right? But the universal connections between managing risk on Wall Street and fighting off a literal zombie horde are absolutely stunning. Because whether you're watching your retirement account shrink during a massive tech collapse, or, hypothetically speaking, of course, barricading your doors against marauders, the psychological framework for staying alive and ultimately thriving is exactly the same. To make sense of all this, we'll be walking through our universal playbook: extreme environments, high growth opportunities, steady value returns, hedging against the worst, blueprinting the future, and finally, universal rules. Okay, section 1: strategies for extreme environments. Think about what makes an asset truly valuable when the world literally flips upside down. True survival strategies really only emerge when resources are incredibly scarce and danger is just off the charts. On Wall Street, an investor hunts for beaten down equities. Think companies like Tesla or Shopify as prime assets to accumulate during a downturn. But if you're in a post-apocalyptic wasteland, your idea of a prime asset shifts drastically. You're not looking at digital shares in a brokerage account. You're looking at securing 100 kilos of raw meat or getting your hands on the blueprints for a titanium alloy safe house. The currency changes entirely, sure, but the underlying mindset of accumulating vital undervalued assets, that remains exactly the same. Our finance source uses a really specific framework for this called the GVD strategy, which stands for growth, value, and dividends. It's basically an investing philosophy that focuses on balancing massive upside with steady, boring returns to mitigate your risk. And as we'll see, boring returns takes on a whole new, very literal meaning when you're fighting off the undead. We can actually map this exact investor philosophy directly onto the ruthless survival tactics of our apocalypse survivor. Moving on to section 2, seeking high growth opportunities. In the financial world, pursuing high upside usually looks like buying into deeply discounted growth companies when everyone else is terrified. While the market is panicking and heavily punishing stocks like Tesla, a forward-looking investor looks past all that current chaos to see unprecedented long-term scale. I mean, just look at these base case projections. Analysts expect Tesla to hit $136 billion in revenue by 2024, and our source projects a massive $330 billion by 2027. It's the same story with Amazon, which is projecting a staggering $889 billion in revenue by 2027. You're essentially buying the fear today so you can capture that massive future growth tomorrow. And honestly, this brilliantly illustrates the apocalypse equivalent of a growth asset. In our survival story, the main character actually captures an evolved zombie named Shen Qing Wu. Let's be real, this is incredibly risky. But by feeding her raw meat, he builds affection points through his survival system, moving her score from 0 to 10 and eventually up to 40. Now, you might be wondering, why on earth would you take the risk of keeping a monster in your house? Because fully taming her unlocks massive system rewards, 100 kilograms of fresh meat, and the ultimate growth asset, a zombie virus vaccine. He is essentially angel investing in a zombie. He's fronting high-risk capital, which in this case is his own food and safety, for an exponential payoff down the road. That brings us to section 3, securing steady value returns. Here's the thing, you cannot survive on growth alone. In a bear market, unexciting, boring companies are your best friends. Our source highlights Foot Locker and Walgreens as prime examples of the value and dividends portion of this strategy. Take a look at these metrics for Foot Locker. We're talking about a forward price to earnings ratio of under 10, which means it's incredibly cheap relative to the profits it reliably brings in. Add to that a dividend yield of over 4% and a super low payout ratio of just 33%. Look, it's not going to triple your money overnight like a flashy tech stock, but it's a consistent profit beast that constantly throws off cash. It's the kind of asset that lets an investor actually sleep well at night. So, how exactly does that translate to a zombie wasteland? Well, it translates to entirely non-glamorous resource hoarding. Our survivor treats just half a kilo of pork as the absolute ultimate currency. He strictly stockpiles clean water, basic medicines, and raw ingredients. He even focuses on really incremental value upgrades, like tossing out a broken meat cleaver to use a reliable baseball bat after clearing out a few zombies. Just like a financial dividend, swapping a broken knife for a bat isn't a flashy move. It's boring, really, but it is the foundational asset that guarantees you live to see tomorrow. Let's jump into Section 4, Hedging Against the Worst. On the financial side, our source uses a very specific tool called the SDOW. This is a 3 times leveraged inverse ETF of the Dow Jones. Okay, what does that mean in plain English? It's an asset explicitly designed to go up when everything else crashes. It is not designed to be a long-term moneymaker, it is a pure hedge. If the overvalued Dow stocks collapse and the broader market drops by 10%, the SDOW mechanically shoots up by 30%. It is literally an insurance policy that prints money during a disaster. It allows the investor to save face, protect their downside, and then reinvest that newly generated capital when everything else has hit rock bottom. Out into the wasteland, the survivor's hedge is a bit more literal and, well, a whole lot darker. He's dealing with these scheming neighbors, Shen Liang and Lin Wanxi. In a past timeline, these exact same people stole his food and locked him out to die. So he knows their true valuation. He knows with absolute certainty that they are going to betray him. So when they try to orchestrate a late-night ambush, he doesn't negotiate. As he puts it, I eliminated him without hesitation. It is a calculated, totally ruthless move to protect his base capital. By neutralizing the threat early, he perfectly hedges against the absolute worst-case scenario, which in his world is fatal betrayal. Section 5, Blueprinting the Future. Once you've secured your growth, you've locked in your steady value, and you've hedged against immediate disaster, you have to capitalize on that early survival to build an unshakable long-term foundation. Our survivor isn't just trying to live day by day. He's looking at the macro environment, basically the wasteland equivalent of an upcoming massive economic recession. He knows that in exactly 7 days, a deadly, freezing winter is going to hit. To beat the clock on a weather event that will absolutely wipe out anyone who isn't fundamentally secure, he scouts a secluded mountain location on day 1 and then actively recruits an architecture student from a local university by day 3. And his requirements for this foundational safe house are incredibly rigorous. He hires the student Ruan Yuan Yuan to design a blueprint that must be over 100 square meters, built entirely from titanium alloy, with specific areas reserved for farming and animals, so the whole thing can be completely self-sustaining. And how does he fund this massive capital expenditure? By paying her in daily dividends of fresh meat and vegetables. He is quite literally investing his short-term value assets into a long-term impenetrable fortress. This perfectly mirrors the kind of massive future-proofing we see on Wall Street. Our financial source looks out to the year 2027 and projects Amazon to scale to a staggering $58 billion in net income under CEO Andy Jassy. Just let that number sink in for a second. $58 billion. The short-term pain, the aggressive layoffs, and the awkward restructuring happening today are just the building blocks for an absolute profit machine tomorrow. Both the investor and the survivor are intentionally trading the painful volatility of today to build a fortress of future wealth for tomorrow. Which brings us to our final section, Section 6, Universal Rules of Survival. What we've really learned from this explainer is that whether you are navigating a brutal bear market full of crashing tech stocks or a terrifying apocalypse filled with the literal undead, the foundational rules of strategic management remain exactly the same. You have to capture growth when others are fearful. You must hoard value and
हम्म, हम्म, हम्म,